Hello ladies and gentlemen, welcome to today's webinar. I'm Joseph Novichkov, Senior Trading Manager with GDM. This is the first webinar, ladies and gentlemen, for this month, and the topic for this month's advanced series of webinars, we will be talking about binary options. Well, speaking about binary options, the first thing that comes to mind to some of you is only choosing market direction without any concern of how long the market will continue in this direction, or for how many pips, for example, so on and so forth. However, the very interesting idea about binary options, when we talk about binary options, well, you see, ladies and gentlemen, there is no other difference by just defining binary options by just saying pick a direction. Fine, all right, pick a direction is one thing. However, when we talk about markets, we simply understand that everything is about market moves, how long is going to go up, how long is going to go down, how many pips is going to go down if we're trading, you know, the basic Forex trading, for example, the classical type of Forex trading. You know, talking about binary options is an interesting concept of trading on the financial markets. I have to say that there is basically no difference when we're trading binary options or a classic Forex trading. Why I'm saying that is because an advanced type of trader, whether he's an options trader or a Forex trader, the advanced trader, the professional trader, understands that depending on the strategy, it would, of course, lead to a choice that you have to make. And that, of course, is the expiry of the binary options themselves. So that leads us to today's topic, which will we only try to understand why it is very important to pick the right binary options expiry. Also, we will be talking about the connection between the time frames and the strategies that we will keep you know, talking about in the next 3 separate webinars, which will be only about binary options systems, trading systems and strategies. Today's webinar, ladies and gentlemen, we will learn exactly how important it is to choose the right expiry, how important it is from then on to lead to the best time frame on your charts, and therefore of course, try to understand which exactly the strategy is that you're going to be using for the time frame. Now, the first thing that comes to mind is that, you know, after choosing high or low price direction, picking the right expiry is pretty much the hardest thing for any trader to decide. Speaking about this, it comes to about several factors that can impact which expiry is the right one. Failure, however, to pick the right expiry can often mean the difference between an option closing in or out of the money. Basically, it will get you just a few seconds close to your profit, and that amount of seconds will get you on a losing type of trade, and nobody wants that. However, also perfect understanding of the amount of profits, the number of profits here, of course, if we're always trading with one and the same amount, then the number of profits definitely have to be larger than the number of losses in order for us to cover those losses and realize profits at the end. However, I will make a few connections here so I can obviously get you to understand that there are different type of brokers, not only like GDM, you know, other type of brokers offer their own platforms. We will of course release a separate platform which you also can use with a better convenience. You don't have to install the MetaTrader 4, so on and so forth. But this will be fully operational in a couple of months. So for now on, before we start making webinars on the new platform, we will be working with the MetaTrader 4, which means it's by far one of the best options to trade binaries because it allows you to trade Forex classic trading and of course binary options on one and the same platform by just installing a simple extension file. Of course, those that are trading with us already know that. But of course, for those that are not trading with us and they're here on this webinar today, just get on our webpage, GDMFX.com. There you will be facing in a chat on the right down corner, where of course you can forward your questions, or you can just phone us directly on our telephone lines to get in touch with me or any of my colleagues, or of course another account executive that can assist you with the questions you have at hand. Furthermore, we've been preparing some exclusive bonus systems or some other attractive surprises for new traders that are of course only attending the webinars. But as I was saying, like many brokers out there that I've researched only to find out what would be the best decision for us to deliver to our traders, you know, at one point of time, binary options are a simplified form of type of trading. This is what anyone can see by just the first glance of any platform. However, I want to point out that just because that they're very simple, it doesn't necessarily mean that they're simple to trade successfully, of course. It is very easy to open an account, fund your account, start trading, but the hardest part is actually trading correctly and being profitable as well. With the help of the professionals here at the firm, you have, of course, exclusive rights to get in touch with some strategies that we're offering in these webinars. Further on, there's additional one-on-one sessions that we can get onto, break down those systems, find another way to create a system especially for you, of course. That is also a possibility. So the possibilities with us are pretty much endless. We're trying to adjust ourselves to any kind of situation, especially when it comes to the well-being of our traders. But the most important aspect of the trading binaries is choosing the right directions, of course, ladies and gentlemen. Whatever or whether or not, for example, a particular currency pair or any type of asset is moving up or down is the most basic aspect of binary trading, as we already mentioned at the beginning. The hard part is, however, is knowing when, how high, and how long a particular asset will be moving. And as I mentioned, this will of course lead to the decision of our binary options expiry time. All too often, however, is the place where a particular trader and placing a trade, and he's watching that it moves into the money, into the profits for just a little bit of while, and then right back out into the loss as a result. However, if there are traders here at this webinar that have had the same type of experience, that means that they have a problem choosing the right expiry time. So So let's first off take a look at our particular execution table here. I'm just going here, but of course you can choose it from the menu up there. You can just go here on the yeah, I can see that there could be a type of problem here. Probably I should just open it up like this. So probably you're not seeing the chart behind me, behind the particular window of execution. That probably leads to the fact that I can show you only one window at a time because I'm working on one monitor, as I cannot expect you to have more than one monitor, one after another, so we have to work this way. However, the most interesting aspect here is that the basic definition of an expiry time is the time watch, or as we have here, is the expiry. Now, we've made several webinars on the basics of binary options. That's why I'm not going to go through all the execution types, how it's done, and so on and so forth. Rather than that, I want to focus only particularly in one particular window here, and that's the expiry window, because our importance of our expiry time will lead to the decisions that we're making afterwards. So the thing to remember is that the option you buy or sell might be higher or lower than the trade to make a profit. Of course, if it isn't, when you lose, regardless of whether the options was in the money at any time before the expiry, that means you have still not chosen the right amount of expiry, which is pretty much the greatest importance at this stage. So some of the brokers, of course, that I have reviewed in my past studies, of course, where I've trying to find out which would be the best way of giving the expiry time. You know, I've seen sometimes on the expiry drop-down menu, here, instead of 60 seconds, 2 minutes, 5 minutes, 10 minutes, so on and so forth, anything that it's written down in minutes, we have seen that there is a possibility of a time expiry, like, let's say 10:45 a.m., let's say 11 a.m., or 13:30, for example. That's in the afternoon. This is pretty much in the matter of the frame of the day. Of course, there are possibilities of expiring tomorrow, for example, or expiring in 3 weeks or something like that, but it doesn't really make sense to have an expiry for so long. So basically, it makes classic trading confused with binary trading, binary options trading, which makes it, of course, pretty much one and the same. So we had to limit ourselves to something that is going to be much more interesting for a short period of time, and of course to traders that are trading within the frames of 1 day. Therefore, like us, like we have done it here, we have fixed expiries, like, for example, 1 minute, which is 60 seconds, 2 minutes, 5 minutes, 10 minutes, 30 minutes, 1 hour, so forth and so on and so forth, up to 1 day of expiry. That means that there will be that much time between the time at which you have bought an option, for example, and the time it expires, no matter when it is that you have actually bought. So that means you don't have to scroll down. If right now is 15:15, okay, let's say that's my local time. It's 12:15 GMT, for example. Then you have to scroll down and find a particular time of the day, and then calculate for how much time you need to expire. So then you have to find that particular hour of the day so you can place it. Therefore, I believe that this particular alignment here in the expiry drop-down menu sector here, is much better to have it as 1 minute up to 1 day. So from the moment you've opened a position, you have the amount of time that you have selected until it expires. And of course, you cannot really close it prior. However, now we're getting very close to the factors that can affect our expiry choices. There are a couple of things, of course, that are important to notice here that can affect which expiry that we're actually going to choose, along, of course, with the strategy at hand. Some, of course, strategies are intended for a very short-term market moves and may recommend a usage of a very short expiry. So basically, I have chosen several strategies. We will be looking at those from Friday this week, 2 times next week on Wednesday and Friday again. I've selected 6 different strategies. I will see for how long the time will be on our site to take a look at. Of course, if there is something that is of greater importance, I will remove the one which is with less importance. So you will receive the strategies that might be able to fit best in your trading plan. However, for those that are mostly interested, I have a variety of different particular strategies that can be very useful to you, probably fit your particular way of trading, your style, your time availability that you can monitor market moves. Of course, that is yet to be determined. So anyone that is interested, after, of course, we finish with all the webinars this month, you might make a request to our support department to secure an appointment with me so we can talk about it, see exactly what you need, so I can provide it for you. And of course, furthermore to that, to make a good training, and at the end, to emerge as a successful full-time trader. As we mentioned, other type of strategies, however, intend to identify much longer market moves and may need more expiry time. But of course, I have selected varieties from 5 minutes to down to 4 hours in 1 day type of trading strategy. So you will see what I have prepared for you along on this month of advanced webinars, and you will choose the one that fits best for you. Choosing the right time frame, however, may be the most important factor when choosing expiry. So let's talk about that. Now we saw the frames that where you can choose type of expiries here. Now we have to get back to our chart time frame, but of course we will be switching so on and so forth, back and forth, so we can take a look at. Now, I hope you can see the chart once more. We're looking at 5 minutes Euro US dollar binary options chart. But as we mentioned, the time frames refer to the chart length of perspective that you are trading. Therefore, as you can see, as a classical type of trading on the MetaTrader 4, that's why we have everything in one place, is again from 1 minute down to 1 day or even week and month, which of course is pretty much something that you will not be trading on binaries. You know, that's something that a classical trader would be focusing mostly. So the longer the time frame equals longer expiry, as we spoke earlier. Short time frames equal short expiries, obviously. So if you're trading on 1 minute, if you're trading on a chart, of course, which is in 1 minute time frame, the prices using expiry of end of the week is not appropriate, sorry, end of the day is not appropriate, of course, in any more than using 1 minute or 5 minute expiry while trading off on the hourly chart. You will be preferring to trade, of course, on 1 hour chart or the 4 hour chart. So you see, thinking about the trading like this, and corresponding well with the expiry time and the time frames will get you very close to the success, and of course fill up the gaps that you have so far, and probably wondering why the mistakes that you're making on binary options trading are happening like that. So there are 3 different time frames that I like to use. For example, as a regular analysis that you can make on the charts, you can start from a daily chart and an hourly chart as well. Sometimes when you are trading on a high volatility market, you might be switching on and off from 1-minute chart to 5-minute charts, and of course each time frame presents its own original signals, making your strategy improving even more. So each, of course, is affected by news or other type of factors differently, and each of these require expiry that has to be tailored, making it, you know, if you're trading on a smaller time frame, sometimes the volatility is so great that you better switch on some higher time frame like 5 or 15-minute chart, so it can be a little bit more easier for you to understand what is happening on the market, or probably even stay away until the market cools down and digests a piece of information that has just been received. So thinking of all of this like that, if we assume, for example, that it may take, for example, 2 to 4 bars or candlesticks to form a particular signal to produce a profitable market move, then we need to allow enough expiry for that particular move to happen, and to count the amount of bars that might be formed on the chart from the moment forward. So as I mean, let's take a look at a 5-minute chart, for example. We can see the aggressive downward move on the market. We can see that currently the price is at a particular support. So if we are actually going to enter now, only to secure ourselves a sure downward movement, for example, that means we have to allow the time for this particular support to be broken. It usually doesn't take more than 1 or 2 additional candlesticks, speaking of 5-minute charts. Therefore, your expiry have to go something between 5 and 10 minutes. So let's make a particular, how to say, an example here to see what we could cover. Okay, let's say an investment of $10, of course. Our expiry would be 10 minutes, for example, and we select on down. And the clock starts ticking. Furthermore, when we talk about this particular breakdown of this particular support that we spoke earlier, I'm sorry that you can't really see the chart behind me, but then we can see here the momentum movement of the market, and as you can see, the support has just been broken, and we have just a little bit more time until that price holds on to below that level. Therefore, if you have chosen 1-minute chart, it might have been broken. As you can see, the price is moving in and out of the money option, of the money level. You can see a few seconds it stays in the negative area, a few seconds it stays in a positive area, for example, which means that in a volatile market, we have to consider, ladies and gentlemen, the possibility that this support level will be tested many times before our expiry. So we don't really want to play on the small minutes, on the expiry from 60 seconds to 2 minutes, for example, because we have no idea at which given second our direction. Therefore, seeing a little bit ahead of you and predicting the market behavior is what you need to do by using the right strategy. And this is why you're here. Now, talking about choosing the expiry way, support and resistance levels that we're talking about, news even, and your indicators that you will be using in the future, and furthermore, those that I might be able to suggest as from my standpoint of view, are all important things to keep in mind when choosing the right binary options expiry like a professional trader. Now, support and resistance levels are a proven technique for finding areas where the market may be temporarily or permanently halted or reversed, you can see. If a particular instrument that you're trading is trading too closely to one of these seriously impacted areas, the reliability of any given signal could be jeopardized. That's why a few minutes ago I suggested, if you remember, that in a volatile market, choosing a larger time frame and suggesting that it could take a little bit longer time to sustain a support level, broken support level, you might need to just give it a little bit more time. So you see, we're looking at a 5-minute chart, and then we're placing a 10-minute trade. If we have been looking at a 1-minute chart and we've been taking 60 seconds trade, that will bring us very, very close to the 50-50 chance, and this is not what we're looking for. Now, it doesn't matter if we're talking about binary options or any particular type of trading, classic trading, for example, where you can choose your ability to close your position at any given point of time. The same market technique can be applied in binary options by foreseeing just a few more minutes of by the market behavior, by the signals that you're getting from your indicators, by the amount of news and their significance on the market, and of course the strength of support and resistance levels. All of this combined will give you the ability to predict the market with just a few steps ahead, only for you to make the profits. And as you can see, we can see here the price table. We can see the market moving even lower here. So we are assuring ourselves that the amount of time that we have taken here as an expiry is just about enough for our profits to be achieved. So the further away the price moves from our initial entry, the higher the chance we have for a successful trade. So this brings me to what I said earlier into our session. It's not only the direction which is important. Okay, you have decided that it's going to go down, and yes, you have guessed that it's going down. Pretty much you've guessed it right. But the amount of time that it's going to keep going down and the amount of pips that it's going to keep heading down gives you more and more reassurance about your future profits and the outlook of your account at the end of the month. For example, let's say a particular currency pair or any instrument out there is trending. Okay, it's in a trend. It doesn't matter if it's up or down. It doesn't matter if it's on hourly charts or you have received a particular strong signal on any indicator that you're using. The order of every single trade that you're placing has to start with the time frame that you're looking at. The strategy that you're using for this time frame. And then on, it goes from the expiry time that you have to be deciding. Would that be more than enough for this trade? But at this time, the asset or the trading instrument might be trading too close, for example, too close in and out of this support or resistance level. So as we just made a very simple technical analysis, given the fact that we're getting into the US session so far, the volatility is increasing, so we gave it just a bit more time just to be sure that the market move, which is going to be downward, will be sustained long enough for our position to be executed. Now, if we were on a classic trading so far, we have probably made our profits long before this particular time expires. However, the important thing here to understand is for those that have not decided what exactly they want to trade, whether they want to trade binaries, whether they want to trade classic trading, classic Forex trading, this is something that you have to choose from trying both of these, and at the end find which exactly is your own particular type of trading. So you see, even this particular way, this could be a very close call, because right now we're getting very close to our expiry time, also very close to our support level where we initiated our position, but our confidence so far, by the amount of move that it made, the significance of it, gives us a little bit more reassurance that this could be a profitable trade. However, this is the market. You can never be sure about anything on 100%. And as I mentioned, everything could be a close call. But what we can do is by adding additional indicators. So far we don't have anything. We only have a simple moving average, 200 expiration moving average, which I'm using on every type of trading, regardless of whether it's binaries or classic trading. But trading the news, ladies and gentlemen, is another thing, because a very huge influence on the market is always present when there is something that many traders will be looking at and most of them will avoid. It is not, of course, uncommon for the news to be unexpected or surprising for some of the traders by being better or worse than the expectations on the calendar. Also, that could send the markets straight off in the opposite direction from where any kind of signal generated by your indicators, making a position highly unpredictable. Sometimes, of course, news, as expected, is not enough to keep the market moving in the same direction as expectations. You see, trading the news with binary options is something that I would actually recommend most of the traders with a faint heart to avoid in any kind of situation. As you can see, getting too close to the US market, that was a very close call into resulting in a loss. A perfect example why you should not gamble on just one thing. You should always, and as you can see, let me show you, the market just went back straight below that support level, making the amount of time insufficient for our particular position. Now, often time is always not enough, but major market moves will converge with an event like, for example, today's. Let me show you the chart to show you exactly what I meant by the time was insufficient. Okay, our opening was here, and as you can see, just another minute was not enough to give us our profit. So that was a very close call. But the first things first, we only saw the market direction, we saw that the price is below the 200 exponential, and we decided to go short or to go down on the binaries. However, as I mentioned, we need additional indicators, something that will reinforce our direction in the market. But of course, let's talk about this on Friday. There are two very nice strategies that I've created for you. Those will be on small time frames. We will be talking about a bit more aggressive binary options trading, where these close calls can be eliminated. And as you can see, we were absolutely sure about the market direction. We had no doubt that the market will go down, but the expiry time is extremely important, only to disappoint us with just a few pips. You see, 2 pips. However, indicators, just an example here without going any deep into it, indicators also have a big influence on which expiry time we will be choosing. Let's take, for example, convergence and divergence on the moving averages, or the so-called MACD. This can occur in any time frame, or even between the time frames. So, a convergence is when the price action and 2 or more indicators or time frames are in agreement or in alignment, producing the same signal at the same time. This is a strong signal that when only one indicator or the same time frame is producing a signal, is a less stronger indicator of the market direction. And not only that, but we know that the expiry time that we're going to choose is also with a bigger certainty. But that means that we always have to know our charts. So you see, ladies and gentlemen, exactly what I meant. We were sure about direction, but we were very, very incompetent of choosing an expiry time. So that's why this first webinar is very important for those that are actually having plans to stick around until the end of the month, so you can find out about the charts. And for those that have decided to leave prior because they have decided that I'm talking about any insignificant things and I'm just losing my time here for things that are not important at all, are highly mistaken. So, knowing our charts, ladies and gentlemen, when we're trading binary options is the key to successful expiry choices. When I've started some time ago, a very long time ago, I've learned to measure each and every particular rally, each and every particular pullback or correction, in each and every bear or bull market. And this is on each and my favorite instruments that I'm trading. Let's say the euro dollar, gold, oil, pound dollar, for example, indices also, whatever it is. I have it written down so I don't forget on each and every time frame how long a rally in a volatile market continues in a specific time of the day, of course, how long a resistance take place, support as well, so on and so forth. Those events for each and every individual instrument that you favor or you want to trade or you understand better is a record that will play a very significant time in the future of how you choose your particular expiry. Not only the indicators that you're using. So you see, we were here just a minute longer, and we would have had a particular good idea. Or maybe if it was 5 minutes longer, you see. It doesn't really matter. If it was on a 15 minutes expiry instead of 10 minutes, right now we would have been on profit because our executed position was up here on the support. So you see the 5th minute ended here. That makes it 1, 2, 3 by 5. That's 15. It always comes down to expiry time. And now you will see that the market will start pulling back up, trying to retest that support level one more time, and if it gives in, it will continue moving downwards. From all of these timetables that I've recorded, of course, for some instruments I even recorded that data on a yearly basis. And that's how I know what is the average length of, let's say, short-term rally or a short-term bear market or short-term bull market, long-term bull and bear market, long-term sideways, for example. All of these things are extremely significant because knowing the average time in which direction continues will allow you to better pick your expiry time. Furthermore, of course, to the expiry, the choices that we're going to make further on down the road will be in our next webinar. I've separated those two because if we've had to start with at least one strategy, it will have to have at least another 1 hour to go for, and I don't want to keep you away from the market for so long time. Besides, we're getting very close to the US market opening in about 50 minutes from now, so everyone has to get ready, follow up on the news, pick their time frames, so on and so forth, and decide which instrument will be more volatile during that time so we can trade and make profits. Until next time, it was a pleasure for me to start this month of binary options webinars exclusively for you. And of course, for whatever questions you might have, you know how to find us, gdmfx.com. Your chat will appear instantly and you can forward your questions there. For any other extreme reasons, you can always call us at our phone directly and we will be there to assist you. Thank you very much for joining us today. I'll see you on Friday, same time, same place. See you then. Bye-bye.